You found it, an underpriced property. You stabilized it. That's sort of the renovation component is you stabilize it. You got the rents, then you refied it, even pulled a little bit of money out. Now it cash flows like a champ. You throw in there the 50-50 partnership on top of it. Talk about a great deal. Really good first deal. Welcome to the BiggerPockets Best Deal Ever show. I'm your lovable host, Ken Corsini, who with my wife, Anita, have flipped over 800 houses in Atlanta since 2005 and even have a show on HGTV. But this show isn't about us. It's about all the amazing real estate investors out there that are crushing it. It's about their stories, their best deals, how they sourced them, how they funded them, and what we can learn from their experiences. This is the Best Deal Ever show. Hey, this is Ken Corsini with the Best Deal Ever show. On today's episode, I am joined by my new friend, Ashley Kehr. Ashley, how you doing?
Good. Thank you very much for having me.
Thrilled to have you on. Thrilled that I'm not the coldest place in the United States this morning.
Yeah.
You were up in Buffalo, New York. Now, you got to tell us, how cold is it up there?
Yeah, it's 14 degrees it was this morning when I got into my car. So it's a little better today.
And how much snow is on the ground? That's the other question.
We have about an inch right now. We haven't gotten snow maybe the past 3-4 days, so it's not bad, but starting to ice over. Everything's icy today.
What is that like doing real estate up there, like in the winter? It's got to be just tough, right?
Yeah, well, a lot of our driveways are so small, like where the rental properties are, that the tenants take care of their own snow plowing for like big complexes and stuff.
Okay.
I just stopped managing 2 big apartment complexes, but like every day we would have to salt just because the worry of slip and falls. So big thing to worry about.
So you're in Buffalo, New York, and your primary business model is just buy and hold. Is that right?
Yes. Yep.
And how many units do you guys have now?
I have 32 units, 2 commercial, the rest residential.
Okay. And the commercial ones are what size?
It's a 4-unit building, and it has 2 residential upstairs and 2 commercial downstairs.
Oh, that's cool.
The whole building, it's about 4,000 square feet total. So it's a small building, brick building, right on Main Street in a little town.
Oh, man, that's awesome. So you primarily then focus on kind of the smaller towns around Buffalo. Is that right?
Yeah, the rural areas. I have 2 duplexes like in the city limits, and then the rest are all in small towns, some low income where there's more renters than buyers. But it's been working out well so far.
Interesting. So what's your price point in upstate New York for kind of rural areas?
The cheapest house I bought was $17,500 a duplex, and then the most expensive duplex was $143,000.
My goodness. So, and then just everything in between.
Yeah.
Goodness gracious. But what are rents on some of those lower end ones? I mean, they cash flow pretty well up there?
Yeah. The problem is the property taxes are higher, so that kind of eats away.
Yeah.
But for like a 2-bedroom, the rents can range from about $600 to $750. Okay. Kind of give you an idea there.
And what are you buying that for today?
Well, the last purchase I made, it was $35,000 for 2 units. So
35 for the whole duplex.
Yeah, for the whole duplex. Yeah.
Like 17 a side.
Yeah.
And each side's getting $600 to $750.
Yep. Yeah, okay,
that's
for that one specifically, that one's getting $600 one side, $650 the other side.
That's crazy good cash flow. And do they need a lot of work? Are you buying those and like doing a full overhaul?
The commercial building I bought, the 4 units, like the first big rehab I've done. I actually gutted the one apartment, but the rest have been just cosmetic updates, like maybe painting the cabinets, vinyl plank flooring, stuff like that.
Man, that's good cash flow. The property taxes can't be that bad that it's...
I do about $200 a door here. So that's what, but I'm also buying with a little of my own money down. So I'm not putting 20% into it. I'm buying undervalued houses, doing the couple cosmetic. So I buy with cash and then I refinance, kind of the BRRRR, but I'm not doing big rehabs. So I'm pretty much financing for what I buy it for, so that I'm not putting any of my own money into it. So the cash flow will get better once that's paid off.
Sure. Where are you getting your finances? That's probably a tricky price point to get financing for.
Yeah, I started out with a money partner when I first started. And then now I have a commercial mortgage line of credit on one of my rental properties. and I just draw off that each time I want to purchase.
Oh, that's interesting.
And then pay it back. Yeah, after I refinance.
So you're not even putting necessarily permanent financing on a per unit basis?
I will once I get it rented if I need to fix it up a little bit. But yeah,
Gotcha.
I'll pull off the line of credit and then put permanent financing on that and pay off the line of credit.
Gotcha. Who are you using for permanent? Are you just using like conventional, or are you going through like a local bank there to hold these suckers?
It's really varied, but I do use really small local banks. Like the one I've had the best luck with only has 7 branches, I think.
Perfect.
But right now they've pushed me over to their commercial side. They've said I've got too much going on. Residential doesn't want to deal with me. So
hilarious. I will say this, that small local banks in that scenario are your best friends, but it's funny.
Yeah.
It's amazing how quickly you'll not fit into their box anymore. It's crazy how they don't love residential. The small local banks, they want commercial for whatever reason. So cool. So you've got 32 buy and holds right now, a couple commercial deals, a bunch of duplexes. You've been at this for how many years?
5 years. I started investing myself, and then I worked for an investor the past 7 years.
All right. So you've been, you know the business. You've been at it for a while. Surely there's one deal in particular that stands out as your best deal ever.
Yeah, it still kind of shocks me how it happened, but I'm excited to talk to you about it.
All right, let's talk about how you found this thing.
Okay. So I had I think the 3 duplexes at the time when I purchased this one. And I had a friend who also had some rental units himself, and we decided we wanted to partner on a deal. So we started looking into this town where we had never purchased before, and we found one house. It was a duplex. It had been on the market for about 30 days. It was listed at like $48,000, and they just dropped the price to $42,000, I think. And so we went and looked at it, and it was not, beautiful granite by no means or anything, but it was perfectly fine condition. I mean, new laminate flooring, was freshly painted, even though some of the paint colors were bright yellow and bright pink.
Right.
But there was nothing that had to be done to it to get someone to move in. They had put new carpets down in the bedrooms. So we put in an offer for $35,000, and he countered at $35,900. So we ended up getting it under contract, but we were a little too eager, and we didn't know where we were going to get that money from. He made a cash offer.
Oh my gosh.
And we had worked with a private money lender before. So worst case scenario, we figured we could go to him, but we didn't know for sure. So at this time, we were both working on getting commercial line of credits on each of our rental properties that we each own free and clear. So when we were meeting with the banker, we said, will this be done in time to make this cash offer? And he said, honestly, no, it won't be. And so what we did was we printed off a BiggerPockets calculator report, and we brought that in with us and pictures of the property and said, this is what we wanted to use our line of credits to purchase this property. Is there anything you can do? And he actually offered us a 90-day unsecured loan for the purchase price of the property.
Nice.
He's like, go ahead, here you go, you have this, and then come back, refinance with me after you close, and we'll put some permanent financing on it. So nice. I love this deal because of how the financing worked out. So we bought it with no money out of pocket. And then we had to buy a fridge for the downstairs unit. And I think we spent $800 on that. And a week later, the appraiser came out, appraised the property. We had rented the upstairs for $600 and the downstairs for $600. And after it appraised, it was $55,000. They appraised it for, and we had bought it for $35,000.
That's amazing.
Yeah, so it's really
instant $20,000 in equity, just like that.
Yeah. So after that, we decided, well, let's finance for, we took out $42,000. So it covered all of our closing costs, covered the $800 fridge, and it gave us, I think we each took $1,000 and put it in our pocket.
You made money by refinancing. I love that.
That was really exciting how that worked out. And the bank actually, we had an LLC together, this partner and I, and it was our first deal together, but the bank actually did a residential loan with us, even though it was in an LLC, which this was the first time I ever had that happen. And they did a 20-year fixed loan.
Nice. So you didn't even end up needing that commercial line of credit against your other property. You just got the unsecured
line. We
line.
didn't even use that for this deal at all.
Yeah. So you got the unsecured. How much was the unsecured line for? Was it just enough to buy it, basically?
He wrote a check for what we needed at the closing table.
Golly, that's amazing.
Yeah. So that was really cool.
That's just one of those, okay, we've got a relationship. You've got good credit. We trust you. Here's an unsecured line. It's funny. I've had a couple of those here recently where people have been able to get unsecured lines. It's easier than most people think to get an unsecured line. They don't, if you don't ask, but you don't know until you ask.
Right. And that was the thing. We kind of asked, like we just told him we didn't know what we were going to do. And he kind of offered that, like we never even thought that would be an option.
Right. It's basically like a credit card almost. It's just like, just give me some money unsecured.
Yeah.
And what's the interest rate on something like that? Do you know?
So that interest rate was 8% we were paying on that. And
which is super cheap.
Not bad at all. Yeah.
No, that's super. I mean, compared to even a private lender, hard money, that's going to be less likely.
Right. Oh yeah.
8% on unsecured line, refied it for 42, and you're cash flowing. Well, you're getting 12,000 on the unit with a loan after you made some money at only 42,000.
Yeah. So our cash flow ends up being like 210 a month right now because it is in a flood zone. So right now, while the mortgage is on it, we are paying flood insurance on it. But
is that 210 per side or 210 total?
Total. 210.
Oh, really? I'm surprised.
Oh, no, I'm sorry. 210 per side.
Per side, yeah. So 420 for the overall. I was going to say. I mean, even still, that's probably lower than I would have anticipated with only $42,000 mortgage on it. But so how much of that is taxes?
The taxes on that property are about $2,100 for,
per side?
Together, $2,100 for the year.
Okay.
For a $35,000 property, you're paying $2,100 in taxes.
That's high. Yeah, that's definitely high.
And then the flood insurance is $1,500 a year, and then just our regular landlord insurance and property insurance is about $650 a year.
I gotcha. And are you doing the property management yourself?
As of February 1st, I will no longer. So 2 more days.
Really?
Yeah, I just transferred over everything to a property management company, and they completely take over February 1st. So
good for you. Life's
so
too
when this
short.
airs, yes, I will no longer be managing my properties.
Good for you. It's tough, man. We did it for a couple of years, and then we eventually partnered up with the company. And like, you know what? It's just, you do this professionally for a living. You're very good at it. You have systems in place.
Yeah.
It's worth giving up the 8% or whatever you're going to pay for it.
Yeah. We're actually doing 5%.
Oh, well, geez, that's practically free.
Yeah.
It's not worth your time. How early on in your career did you do this deal?
This was 2017, and I bought my first one in 2014. So about 3 years in. How
did this particular deal sort of change things for you going forward?
Well, it's the first time I had a partner when I first started, but he was 100% passive. He had nothing to do with it. We're still partners now, nothing to do with anything. So this was the first time I was 50-50 everything with the partner where, he did the maintenance, I did the leasing. We needed to put money in, we both put money in. So that was an interesting learning experience on how to kind of work that out and not worry so much about, I'm spending 10 hours doing this, you're only spending 8 hours doing that. And we're still working together. We've done other projects together. So it's worked out well. And
are you guys doing like one new LLC for every property you do together? How are you guys organizing that?
No, so I personally have an LLC for every partner I have.
You do?
So
okay.
Right now I have 3 active partners, and I have an LLC with each of them. We have any of my properties with them, I have in that LLC.
Gotcha. That makes sense. And then all your partnerships are 50-50 for the most part at this point.
My brother for Christmas one year, I gifted him 25% of a house. So he's 25 and I'm 75.
What a gift. What a generous sister. Jeez.
It was a $20,000 house. So don't get too excited.
That's pretty cool gift. What a great idea. Here's 25% ownership.
Yeah, I printed out the LLC documents. I wrote up an operating agreement. I put in a little gift box, and give it to them for Christmas.
Wow. It's a gift until everything goes sideways and the
Yeah.
tenants burn down the house. And then you're like,
Yeah.
ooh, sorry about that gift.
Right.
That's awesome. What a great quintessential, like, just, it really is the Burr method. I know you didn't do a whole lot of work on it, but it is. You found it, an underpriced property, you stabilized it. That's sort of the renovation component, is you stabilize it. You got the rents, then you refied it, even pulled a little bit of money out. Now it cash flows like a champ. You throw in there the 50-50 partnership on top of it. Talk about a great deal. Really good first deal. Well, Ashley, thanks so much for coming on, man. This was fantastic.
Yeah, thank you for having me. I really enjoyed it.
Awesome. Take care.
Thank you.
Thanks for listening to the Best Deal Ever show, brought to you by BiggerPockets. If you've been energized, entertained, or enlightened by today's show, please feel free to hit the subscribe button. You can also follow me on Instagram and Twitter at Ken Corsini, or check us out online at redbarnhomes.com. And don't forget, one man's best deal ever may be the inspiration you need to create your next best deal. So, hope to see you on the next episode.